All right, guys, welcome back to the channel. So today we are going to talk about Fidelity's MSCI Utilities Index ETF, ticker symbol FUTY. This is a utilities-based ETF that I think you will have a lot of interest in after we review this video. So check it out. Let's get right into it. Looking at the overview, we are trading at $42, and the expense ratio is 0.084%, which is very low. But let's get into what this actually is, because that's more important. So this ETF is going to generally mark the performance of the MSCI USA IMI Utilities Index. 80% of the assets and the securities included within this USA IMI Utilities Index is going to be followed by FUTY. This is a sector equity passively managed following utilities only. So what makes up this fund? What I like about it is it's very concentrated. It has 70 companies only in it. The top 10 make up 52%, whereas the other 60 stocks within this FUTY make up 47.73%. You can see right here the top 10. Next Era Energy makes up almost 11%. Southern Company makes up 7%. Duke Energy makes up 6%. Constellation Energy Corp makes up 5%. Sempra 4%, and the list goes on. We're going to break down these holdings by weight in just a second, but I just want to show you the geographic exposure is all in North America at 99%. And these are medium 60% size companies. Large is 30% and small is 7%. As you can see, it is basically a mid-cap growth value ETF, which is nice. And what is it exposed to? The electric utilities, 61%. And gas and water make up the rest. So let's go through the all holdings. Take a quick look at this. So we said 70 stocks within FUTY. Next Era, which we reviewed at 10 to 11%. But let's go down to some of the smaller big dogs, because once you get past these top 10 right here, this is where you start to get a little divided. So you have 3%, around everything is less than 3%, and then you get to about 1% for the rest. But these are all utility companies. And I'll just leave this here so you can quickly take a snapshot if you want of these companies. So focusing on the distribution expenses, we can see that the yield is 3.37%. So that's an excellent dividend yield every single year. Gross expense ratio is very low at 0.08%. The net expense ratio is low as well at 0.08%. That will be factored into the NAV price. And as you can see, this just shows you the dividends that have been given so far quarterly. You have June of 23, September of 23, December of 23, and now March of 24. So you were getting about anywhere from 31 cents to 38 cents per dividend. So that's nice. Ratings and analysis, you can see that the analyst ratings are pretty high on it. In the 10 years, it's 4 stars out of 5, and this rates it out of 51 funds. Short, midterm, and long-term sentiment are strong. And now looking at the overall performance, what I like to look at is the growth over the lifetime. But let's look at the hypothetical. If we bought $10,000 in 2013, 10 years from now, we have doubled our money. It'd be about $22,500. So that's a nice return. And as you can see on the bottom, our lifetime is 7.99%, whereas 10 years, which we already spoke about, is 7.71%. And that just goes to show you, if you're making 7% a year in 10 years, you can expect to double your investment, which is excellent. So it doesn't take that much to double your investment. You just need time on your side and to make a consistent 7%. So reviewing the key statistics of this FUTY, the utilities ETF is an ETF. It's not leveraged. It's not inverse. So it's definitely a long-term type investment. Portfolio fundamentals comparing FUTY against the sector median. You can see that the net expense ratio of FUTY is much lower at 0.08% compared to 0.5%. And the dividend yield is higher at 3.27% over 1.63%. So I definitely like the idea of this fund due to the low cost expense ratio and the dividend yield. Comparing FUTY against its peers, we can see here on the left side, FUTY with the Fidelity symbol compared to Vanguard, iShares Utility Sector Spider, and the Invesco S&P 500 Utilities ETF. You can see here that they're all passively managed, but what makes them different is the expense ratio is the lowest for FUTY, And the undefined, it has $1.1 billion invested. The only one is Vanguard at 4.83 billion, and the IDU has 13.5 billion, whereas the Spider has 11 billion invested. So definitely competitive with that aspect. The expense ratios are close with Fidelity and Vanguard as always, and then the Spider ETF XLU. So let's do a quick comparison because I showed you the composition of FUTY, but look at the composition of XLU. There's a reason why I wanted to bring this up so you can see the difference in composition with this. So let's just type it in here, XLU. And then let's show you the composition based on that. So looking over here at XLU, this is the Spider sector fund. Look at Next Era at 12%, whereas we saw it was at 10%, and Southern Company is at 8%, whereas that's 6 or 7% in the other one. So you just have to be very careful how concentrated you want it. When you buy like this example, which is the XLU Spider Fund, you are only investing in 32 companies instead of the 70 that we had in FUTY. So if you want a little more diversification, it makes more sense to go with FUTY because you're going to have double the amount of companies within that ETF. So it's definitely something that you want to look into. So now the reason I bring up the Fidelity 500 Index Fund, which is the S&P 500, which is the cornerstone of everybody's portfolio, I just want to show you why I think that ETF FUTY utilities is important. If you go under the composition of the S&P 500 and you look at the sectors, you can see that utilities is only 2% of the S&P 500. So in my eyes, I try to pick ETFs where I can get a little more exposure in that area. So if I have an ETF such as FUTY, I know that if I'm buying it, I'm not double buying into other funds that I own. Most 401ks have, S&P 500, where you are just compounding and buying the same companies over and over, the Microsoft, Apple's, Nvidia, like the leading growth technology stocks. So this ETF offers you the ability to get some utility stocks and have some diversification by owning FUTY and having 70 companies and maybe make that, a certain percentage of your portfolio where you could have a little bit more diversification. All right, guys, if you made it this far, thank you so much. Check out my playlist, Fidelity Index Funds and ETFs. I go over the Fidelity ETF of Energy, FENY, the Fidelity Growth Fund, FSPGX, the Fidelity Small Cap Index Fund, FSSNX, the Real Estate Fidelity Index Fund. I got everything Fidelity on here. There's semiconductors, how to set up automatic investments, Total Market, FCROX. Check out my videos. I think you'll like them. And until next time.